Joining me now with more is Chris Versace. He's a Chief Investment Officer at Tematica Research and Portfolio Manager at the Street Pro Portfolio. Chris, great to have you.
Thanks for having me.
What is your reaction to what we heard from the Fed chair yesterday?
No surprise. I mean, the market widely expected that they weren't going to deliver a rate cut. We got that. But coming into it, we've gotten a lot of data that says, the economy is still relatively healthy, maybe not robust, but healthy. The April employment report was good. What we saw for the April ISM services report was good. New orders picked up as well. But inflation pressures remain. We saw that in the April ISM manufacturing price component and the service component, both of which jumped up. And as we think about things, Kristen, we're going to start seeing the impact of falling port traffic, falling air freight traffic. That's going to help pick up prices. We're also hearing from a lot of consumer package companies that they are going to raise prices. So I think the Fed chair was right to wait.
And in terms of where we go from here, he said that he wants to see more data. What is your anticipation in terms of when this data starts to show something different that would cause him to change his course?
That's a great question, right? Because if we kind of game out what I just said and the impact of tariffs that we know thus far, we're likely to see the April CPI, PPI next week move higher. That won't be helpful for cutting rates. But ahead of the Fed's next policy meeting in June, we will get the May CPI, May PPI, May ISM data. So a lot of data coming through. Depending on what happens in the next couple days with tariffs, maybe there's something that starts to shift or market sentiment shifts. But if we don't get that, odds are we'll see the full impact of this slower freight and incremental tariffs in the May data. And I don't think that's going to give the Fed a lot of leeway either. So I'm not really convinced that we're going to get a June rate cut like some people are.
Yeah. And what are you seeing on the earnings front right now? Because, of course, it's a trifecta, right, between trade policy, earnings, and, of course, what is playing out with the Fed. So what have the results showed you so far?
So, it's kind of interesting, right? So a lot of folks were worried about, the AI data center companies, and that appeared to be better than expected, reiterating capital spending. But there are pockets of weakness out there. We are seeing some companies kind of, as they adjust their outlook for tariffs, something we expected would happen, they're kind of reducing their profit picture or their margins. We saw that this morning with Shopify, right? Where revenue's going to grow faster, gross profit dollars not going to keep pace, margin getting compressed. Where I'm a little concerned, though, is what we're going to see as the earnings season pivots to retailers, right? What's going on with the consumer being increasingly selective, impact of tariffs, how are they going to guide with everything that we're seeing on the port issues? Odds are their profit picture is going to get under pressure. Earnings will come down.
We do see stocks set to open fractionally higher today, Chris. The S&P 500 up about 0.8% on that news that we referenced earlier. The president announcing a deal here, what he calls a comprehensive deal between the U.S. and the UK on trade. What does this mean for equities?
I think that we're going to see a sigh of relief. Wow, this is starting to happen. The administration has telegraphed, we're negotiating with 17 countries and we should see some progress, and people have been waiting for it. It's a little surprising that it's the UK. I think that a lot of folks were expecting some progress with India first, but we'll take what we can get. I think, though, at 10 o'clock and 10:30, as we get some of the details, we'll start to understand how what's the level of de-escalation we're seeing in this tariffs, and this will become a framework for the next set of trade deals. Remember that the administration is talking with China over the weekend, that thaw happening people are looking for, and I think if we can see the administration give this deal, maybe a handful of others, we'll have our arms around the framework of what they're looking to accomplish, and that will set the tone for talks with China.
We do have an IPO making its debut, an upsized offering here at the New York Stock Exchange today. Aspen Insurance, the fact that we're seeing these deals come to market, what does that signal to you?
I would like to see the IPO market open. As in the Pro Portfolio at the Street, we own Morgan Stanley, and that's a great play on increasing investment banking activity. So whether it's M&A activity or IPO activity, we track it closely. So this could be the start of a reopening of the window. We'll want to see more deals come, Klarna, StubHub, and other higher profile deals that have been announced and filed and pulled, during the April melee, let's call it. So we would love to see more activity.
Interesting. And in terms of what this US-UK trade deal does, perhaps just some of that activity overall in the market, can it just be as quick as a switch, if you will, in terms of this bounce back, something that can actually be sustained, or where we might run into some headway down the line?
It's a great question, and there's a word that I use quite a bit is hopium. I think the market is looking for stuff to happen, but it could very well get ahead of itself until we know the final deals and the final terms of those deals. So we could still be a little choppy, ahead until we see more data, more details.
Anything else, Chris, that's on your radar that our viewers should know about?
I would just say, continue to watch the earnings season, S&P 500 earnings. That is that helps you determine the market valuation, and based on that, we'll have to see where we go. But I would also say continue to watch what happens on tax cut front, because if we get some trade deals and they're favorable and the administration is able to deliver something on the tax front, wow, we could have a nice move with the market in the second half of the year.
And it was actually a House Majority Leader, Steve Scalise, who was here at the exchange a few weeks ago. He had told me in a sit-down interview that he wants to have that bill on President Trump's desk by Memorial Day.
Right.
Do you think that's realistic?
Hope. I would like to
Right.
see it happen. I think there's a lot in play. I wouldn't be surprised if it slipped.
How would that change the dynamics of this market? Would that benefit a sector like financials, for instance?
I think it would come down to what the terms of the tax cuts are. I think it would probably certainly help corporate planning, right? This is another issue that we don't know yet. If it's going to pass, what are the terms? But I could also see it really helping the consumer out. So that could give a real lift to retail names.
We will be watching those retail names in particular. Of course, many of them actually listed here at the New York Stock Exchange. Walmart seems to be a standout, even during some of these trying times. Is that one that you think might be able to weather some of this uncertainty better than other retailers?
Well, I think if we look, where people are spending, right? Comment from Jack Dorsey earlier this week, talking about Cash App, saying that folks can continue to spend on grocery and gas. You think of Walmart, largest grocer in the U.S. So I think that they were going to continue to pull people in and do other shopping while they're there. I think the same argument holds for Costco.
Interesting. Costco, I know another one that's been on people's radar for a long time. Meanwhile, Bitcoin approaching 100,000. Does Bitcoin look attractive to you?
I'm going to disappoint you, Kristen, and say I have no opinion when it comes to Bitcoin. I realize that might make me an unpopular person, but I'm going to stick to what I know.
All right, Chris Versace joining us in studio. Chris, thank you.
Thank you.